to get above average returns in agriculture with Boyd Woodard and Xavier Santana of Calturas Capital. I'm William Mucker, a client executive with Camaplan. We will be taking questions at the end of the webinar, so please use the Q&A function at the top of your screen or the bottom of your screen, and we'll address those at the end of the webinar. Before we get started, we do have a brief disclosure to go through. Here at Camaplan, we are a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be part of that dialogue with your team of professionals to make sure the investment process is seamless. We do not sell any investments, nor do we endorse any products. We believe that you should always do your own due diligence before investing your money, whether it be your retirement accounts or otherwise. Here is my contact information. If you or anybody you know who might find the information useful has any questions about anything talked about today in the webinar and how it applies to your self-directed IRA. In this webinar, you can expect to learn about how the agricultural sector can be a lucrative investment, find out which variables to consider when investing in agriculture. Viewers will leave with a better understanding of how shifting their portfolios to other investments such as agriculture could be beneficial given the economic climate that we are currently in. And without further ado, I'll pass it over to Boyd and Xavier, and they'll begin their presentation.
Excellent. My name is Xavier Santana. I'm with Calturas Capital. And on this call, we also have my business partner, Boyd Woodard, as well as our in-house broker and consultant, Quinn Mulrooney. So he'll be available for Q&As as well. In this presentation, we're essentially going to be talking about how to get above average returns in agriculture. With that said, let's go ahead and dive in. On the agenda, we're going to talk about why we want to invest in agriculture, farms versus alternative investments, agricultural investment fundamentals, permanent crops versus row crops. What do we like about olives? How do we get above average returns? Obviously, closing final thoughts, as well as a Q&A.
Can we share the slide deck? I am only seeing the about the webinar on my end there.
Here, I'm sorry. Here we go. All right, everybody should be seeing this.
Yep, I see it now.
Okay, excellent. So again, the agenda, it's in front of you now. Again, we will be talking about investment in agriculture, farms versus alternative investments, agricultural investment fundamentals, permanent crops versus row crops. Why do we like olives and how to get above average returns, closing, and final thoughts, as well as a Q&A session. Boyd Woodard and I have been business partners for quite some time, but more importantly, we are childhood friends. We've known each other there for 44 years roughly. We grew up together in the San Joaquin Valley between Sacramento and San Francisco, out on the Delta, where there's over 1,000 miles of waterways and completely surrounded by farms and the farming families that live out there. I have been professionally working as a commercial real estate broker. I own my own company, Northgate Commercial. I've been doing this professionally for 24 years. I also have 12 years of syndicate investing as well. Boyd, if you want to speak about yourself as well.
Yes, good afternoon, Boyd Woodard. I am a second generation farmer, but I've spent most of my career in the managerial space. I worked in Fortune 500 companies before going off in my own to manage different retail type businesses. And I've been close to the family farming business for the last 30 years.
Excellent. So why invest in agriculture? Agriculture has been a phenomenal sector in our area. We are in what's considered to be the world's breadbasket, California Central Valley. We have arguably one of the best climates. It's a Mediterranean climate. Essentially means hot summers, cool, mild evenings, and basically essentially 4 seasons. As far as the area is concerned, we have a fairly good water, excellent soil, and again, just the overall location makes it an ideal growing place for a variety of crops. The population throughout the world continues to grow, and one thing that we're seeing is that farms are getting smaller and smaller as as populations grow, they're building on these lands, and then a lot of land is also taken out of production from not only development, but also from loss of water, habitat reclamation, et cetera. As I mentioned, California is one of the largest producers and exporters of agricultural products, making it arguably one of the biggest players around the world. In 2020, the Biden administration and prior administrations have always allocated monies or funds towards farms and financing and so forth. And it's something that not only do the local farm families take advantage of, but it's something that we have invested in as well. In 2018, over 139 billion worth of agricultural products were exported around the world, and this is something that we will continue to see grow exponentially. If you've been paying attention to the news more recently, you noticed that some of the biggest players in the world, or at least the wealthiest, have added agricultural to their portfolio for the reasons that I just mentioned: shrinking farmland, substantial tax write-offs, favorable financing. Overall, it's a very, very reliable investment class. It's a hedge against inflation and stable long-term and appreciation, as we'll demonstrate here in just a little bit.
So farms versus alternative investments. This here statistic is from the NCREIF, which is a national recognized third body, and they have looked at from 1970 to 2018 the historic farmland returns, and that has been tracked at a 12.1% overall return on farmland, which is fantastic compared to other types of assets. Farmland is a very resilient, and agriculture in general is a very resilient investment in that it's very stable over the long term. It tends to do fine during economic downturns, and especially in inflationary periods, the top line can track with the inflation in general commodities and benefits from that. Additionally, as I mentioned, it is not as volatile as the other asset classes that are available to invest in.
Moving forward, we wanted to essentially talk about the fundamentals of farm investment or agricultural investments. I can tell you that the one thing that we have found most valuable working with a number of clients, both that are already in farming, business professionals, medical groups getting into farming for obviously the cash flow, but also the tax benefits. I would say the number one thing would be your consultants. The first one would obviously be a good real estate broker, somebody that has a long track record, history in farming, and understands the various aspects, soil types, crop types, et cetera. And so finding a good, qualified, seasoned real estate broker and advisor would be arguably the most important place to start in the first place. The second one would really be the farm manager. Once you do identify the properties, whether there's a crop on the property or you're planning on putting some form of a crop, finding a farm manager that is both experienced in the crop, has a long track record, is very well connected within the industry. All those things are going to be absolutely critical to really mitigate risk and really understand the core fundamentals of what it's going to take to make that property and that crop type a successful investment for yourself. In investing in anything, you got to do proper due diligence. In California, water has been arguably the most critical issue. It's become an issue from all the way from south of Bakersfield and really other states as well, but from Bakersfield all the way north through the Sacramento Valley, headed towards Redding and Shasta. The U.S. or California did create the Sustainable Groundwater Management Act, otherwise known as SGMA, and it's really designed to protect the groundwater resources. This has been a very hot topic at every agricultural conference, and it's something that's evolving as the state tries to figure out how to protect its water rights. As far as water, there are essentially three types that most farmers are going to be dealing with. The first one generally is going to be well water. This is where you have commercial wells on your property. The second one is going to be district water. This is where there's a district that's put together water is transferred within the participants of that district. And then the third one's going to be pre-1914 riparian, which essentially states that you have access to waterways that are near the property. Something important to note about water districts: even though you may have a water district, the quality of the water and the availability of the water are going to be very critical. In doing so, or in saying so, there's water districts that essentially have no water, and there's other water districts that are very, very strong and very reliable. For most farm properties, you essentially want to have preferably 2 sources of water, typically well and the water district are the most common. On occasion, we will find some with riparian rights. However, two water sources are generally the rule of thumb. Water allocation for water districts, again, very important. They all have their sources. It could be reservoirs, it could be lakes, etc. And so doing proper due diligence on the water districts is going to be very important. Even though you may have water, water salinity or water quality is going to be a major issue. So as much as you may have water, the quality of the water is going to grossly affect and impact your crop as well. And so when looking at these type of or looking at water due diligence, testing your water, understanding the amount of water you're going to have access to, all those things are going to be important parts of your due diligence. The second thing is climate. Not everything grows everywhere. Again, we're blessed in California. In the Central Valley, we do have the Mediterranean climate. And so the vast majority of crops do very well here. And so really what comes down to in selecting your crop is essentially figuring out what the highest and best use of the land is going to be, what's the most important thing for your investment plan, and then finding a crop that's going to basically yield you the returns that you're going to be looking for. And the next thing is going to be really the soil quality. There's compaction, there's lots of soil structure, nutrition degradation, soil salinity, boron, etc. Just a number of things with soil. So getting a good soils consultant, taking soils from the various parts of the farm. As a good example, you can actually take a soil sample from one spot on the farm. You can walk 100 feet in any direction, and the soil makeup will change dramatically in some cases. Moving forward, we've decided in this presentation that really permanent crops are arguably one of the best investments in comparison to row crops for a number of reasons. One of them is the health benefits of permanent crops, and specifically we're really focused on olives, almonds, pistachios, walnuts, and so forth. The reason we really like permanent crops, agricultural land, bare ground, the price varies within regions. However, the type of investment you make is going to be critical as to how you or what types of returns you end up getting. The permanent crops are generally trees. We deal with almonds, typically with a 24-year investment cycle. Walnuts, almonds, pistachios, olives, 35 to as much as 50 years of life. These trees do give you the benefits of bonus depreciation, which you can essentially write off now and apply it to future years. These products that come off of these trees typically have a long shelf life, and obviously, again, everything from the nuts and almonds, there's a variety of products that are being made. They stay well on the shelf. They have an extended life, and essentially are good for shipping and store and so forth. More importantly, with these types of crops, they're less labor intensive. We have mechanized pruning, mechanized harvesting. So dealing with the labor shortages here in California, one way to mitigate against that and reduce your operational overhead is by having crop types that can be mechanically harvested and maintained.
Okay, so permanent crops versus row crops, looking at the investment profile. Typically, row crops have delivered a more stable return. They don't have the cyclicality that happens from long-term overplanting or undersupply issues that make it a more volatile market. But there are additional benefits that contribute to higher returns on permanent crops. because of that volatility, you tend to see times where it's very high returns, as it's showing in this chart. But you do have to plan for some cyclicality, and in managing permanent crops, you gotta watch your cash a little bit more than you do necessarily on row crops, because the cash to cash cycle is much different for a permanent crop versus an annual crop.
So why do we like olives? And this is something that we're going to be talking a little bit in the presentation on cover page. We did have a image of a farm that we currently own right now. We like olives for a variety of reasons. First of all, it's growing in demand. Olives have been around for thousands of years. However, the U.S. and specifically California is in an infancy of olive production. The second really is drought resistant with the California water issues. We don't think we know that they're not going to go away. However, the water is going to be better managed. With olives, they do have they're essentially a drought resistant or tolerant crop in most countries around the world where olives are grown commercially. Most olives are not watered. Here in California, we do water them. The great thing about them is that in the event that we have to turn off the water for 2+ years, the olive trees will produce less fruit. However, they will also remain alive and come back into production after the water's turned on. The third item really is, again, the health benefits of olive, the natural fats, etc. We feel that this is going to be an ongoing demand as the population looks for alternative healthy foods. And lastly, we feel that, again, it's a good overall safe investment. Back to the water, if you turn the water off on almonds, pistachios, or walnuts, the trees will die within months, whereas olives can go in excess of 2 years without water.
Additionally to that, there's a backstop on your downside in that we buy insurance on our crop. So if there is say like a frost during the wrong time of the year, we would be able to cover our expenses on that year, further making it a more safe investment.
So as I mentioned earlier, the reason we like olives, the olive industry here in the U.S. is fairly young and in the infancy stages. California produces roughly 95% of the olive products or oils, etc. For the entire United States. 99.9% of that remains here, locally consumed. So there is an increased demand and a shortage of supply. Again, hence why we like this investment sector. Most of the olive oil that is consumed in the U.S., over 95% of it is imported. It generally comes from Italy, Australia, and parts of Africa as well. Here in California, we do have legislation that does protect the California extra virgin olive oil trademark. It's very important. This is very similar to champagne. So here in California, the California extra virgin olive oil is a protected trademark, so the crop is protected, or at least the sector is. The amount of acres that's planted, if you look at the chart down below, the U.S. has roughly 60,000 acres planted, as opposed to Greece, Italy, Spain, and around the world, etc. Again, the demand here in California is being driven by consumer consumption. And one thing I'll tell you, the California extra virgin olive oil, when you taste it against the competition, it really is a difference. And I always tell our customers and clients that it's the difference between Coca-Cola and Diet Coke. The difference in taste is that profound. Another reason that we like to invest in olives, they use about half the water that almonds, pistachios, and walnuts use. And so again, going back to the issue with water, any type of crop that we can invest in where water is less of an issue, or at least it's not needed as much, is always a good investment for us. So in the years of severe drought, again, we can have 2+ years of life in the trees without watering them. They will survive and they will return back to full production. Low fertilizer requirements, so this comes back to your operational costs. The low fertilizer, low nitrogen on a per acre basis, as well as pesticides and applications and so forth. One of the things here in California as well, as you know, bees do a lot of pollinating. This is very common, especially with almonds and a number of other crops. Olives do not require any pollination from bees. They do self-pollinate. We do have pollinators on the farms, but they do not require any bees for pollinating. Also, the fruit does not touch the ground. It is harvested, mechanically harvested. It immediately goes into the system, and so it does allow for alternative cover crops to be put on the property. And then again, because of mechanical harvesting and pruning, the labor overhead is fairly low on these type of farms and assets. As I mentioned earlier, the Olive Oil Commission does protect the olive industry. We do have the California Olive Oil designation, extra virgin designation, and so it really does allow California olive oil and the producers to both protect their crop as well as the quality of the oil and so forth.
So the other reason why we like olives is because the pricing compared to other permanent crops is much more stable than in comparison. Grapes recently went through a pretty rough cyclical period. Almonds recently, 5 years ago, were about double what their price is now, a little less than double. And that was a result of overplanting. But the olive for olive oil in California has gone through its infancy stage over the last 20 years, and now there's processors that are creating a lot of demand through the protected California brand and have built up the infrastructure. So the demand for olives is the olive farmers have a very strong position in that they can negotiate to keep a very stable price, which continues to grow because the producers, the mills, are trying to have a very stable supply to meet the demand that they and the channels with which they've grown demand for California olive oil. So there is a tailwind in that the demand to fulfill these growing mills is there, and hence why the price has been stable and growing, and why we were looking for additional lands. The olive investment, it takes a few years to get to cash flowing, but once you have them in production, you can get a decent cash on cash return. And if you look at this chart on the right, you can see that there's a substantial potential tax savings in the first year, and this is based on a model of buying an existing farm. The value of the unsecured assets, the trees and the irrigation system, can be written off in that first year. So,
I'm sorry, go ahead, Boyd.
So again, on how to get above average returns in agriculture, it really depends on selecting the right asset class, and then that asset class in agriculture, and then doing your research on the particular property that you're looking to invest in. You really want to lean on professionals in the space, the brokers that understand the valuation, the trading, and the history of the water and what's going on in that area. There's also consultants that you can get to through your broker, and then network with them to get to other professionals in the space to really understand what is happening with that asset class, what the risks are, what the potential benefits are. So again, having a good representative to help you find the real estate is very important. Someone that specializes in agriculture, that will allow you to make sure you're paying the right price for the land that you're prospecting, and then have a good investment strategy and as well as a tax strategy for that particular investment. You want to look at your model for cash over the life of your investment. As mentioned, it takes a while for some of these permanent crops to come to cash flow. They don't start producing until sometimes the 7th year until they get to full production. So you want to be modeling that out, working with your bank for the right financing. And there are banks that are set up for agricultural finance, and they understand the cash flow and what the farmer or investor has to be prepared for. I think we've really hit home on having good consultants, and as you look at the class, you'll see, you know, there's not all stories are success, and that's because someone didn't do their due diligence, didn't understand the water challenges or the soil quality, and then they didn't get the return that they could have if they had planned better. And it's a long-term investment. It's great for generational income. Again, as you look into farming, you'll find large farming families that have built up because they kept their properties. They're very lucrative over time and can provide for generational wealth. So in closing statements, I believe agriculture should be in everyone's portfolio. They should have some exposure to it for the stability and for the long-term wealth creation. Make sure you do your due diligence, talk to the right people, and do your homework before you invest. Farm properties are a great source of passive income. Once they are maturing or at maturity, they cash flow for years. And it really depends on the commodity markets, how well you do in one year versus the other, but you can have a nice source of cash flow over time. There is a opportunity to have a farm as an active income. You want to talk to your tax consultant regarding that. But if you do participate in your farm actively, there are some benefits there if you do it right. I mentioned the long-term cash flow on trees. That's just an example of how long you can get production off of these different crops. Almonds, 24 years after the first 6 years of growing the crop to get to production. Olives, which we like, 35 plus years, maybe even longer. But with the type of production we're doing in California, it's been 3 or 4 decades since they've been doing the high production rate type planting in California, and right now we have farms producing still that are over 35 years and continuing to go. And pistachios, a very long-term cycle for those as well. So this is a great source for that generational wealth. We are in private equity syndication, so we buy these assets and then sell portions out, and we love this model because you can diversify into different properties, and you can have truly passive investment, and you leverage the extended network and professionals that your syndicator, your sponsor has, in essentially getting that expertise to help you make sure that you're putting this portion of your portfolio into something that is going to perform and be a stable investment for you. We are also set up our offerings to be able to do 1031 exchange into them. If anyone's interested, they can contact us. It has to be set up a certain way, but we have set ours up into allowed to do that. Again, population is growing, food consumption continues, and there's a demand from not only in the U.S. but outside the U.S. as incomes grow. Just food, higher quality food is usually the first thing that is demanded for countries that are moving their population into the higher income brackets. So that we believe that's a tailwind long term, and supply chain around the world is getting better every year, even though we're in not a good time right now, but it does open up markets, and we believe that's going to be a great opportunity for future growth. And again, properties with excellent water sources, especially here in California where we focus, is key. So with that, we can go to the Q&A, and on the next slide is our information, and you can also likely get that through CamaPlan. And I think this is going to be recorded for future consumption if you want to watch again, but you can always reach us for more questions.
Thank you, Boyd. Thank you, Xavier. So yeah, let's get to the Q&A portion of the webinar. If you have any questions now, please use the Q&A function at the bottom of your screens. And I'll be sure to read off the questions for Boyd and Xavier. To get started, I have some of my own. First question I have is, how much of a tax write-off can an investor expect to get when investing in farms?
Yes, that's a great question. So we'll just use the example of an existing farm. If you buy an existing farm, the value of the unsecured assets, again, which are the trees, the agriculture, the irrigation system, if you had any farm equipment, etc., all of that, the value of that in the purchase price, I would say, just as a rule of thumb, roughly 40 to 50% of the value of that unsecured asset would be allowed to write off as bonus depreciation in year one. So if you invest $100,000 in that first year, you can expect a $40,000 to $50,000 loss to be passed through, and then can offset other income, passive income. So that's, and generally the way I look at it is whatever the return on your investment is, because that's a deferred, right? That's a deferred tax liability. You're basically investing that money for the life of the investment until you revert it. But at that point, you could continue to, you could revert that into another asset that has depreciation, another farm, and continue to protect that or push that, defer that liability, and essentially you'll be investing it through the career until you pass that along to your next generation, which then you know, it becomes another tax issue. But that is one of the main benefits here.
Thank you for that, Boyd. We have some questions pouring in now, and I'll go back and forth between my questions and the questions being thrown in here. We have a question: is there a minimum investment, and must one be an accredited investor to invest?
Yes. So our investments are for accredited investors. We currently do have an olive orchard that is that we are offering to investors, and that's a $50,000 minimum investment in that.
Awesome. Thank you. And thanks for your comment, Mark. Year one depreciation benefit is non-existent for SDIRAs. Another question here. How do you access information on water availability for a farm?
So what was the question one more time?
How do you access information on water availability for a farm?
Quinn, do you want to jump in here?
Yeah, I could help you with that one. So as I explained earlier in the presentation, water availability changes drastically throughout the state. It can change drastically as you drive up and down any given road in an agricultural community. First and foremost, you need to find out if it's in a water district. I have tools in my office that allow me to find out. You can also call the local water district that you suspect it's in, and with your APN numbers, and ask them directly. They will tell you whether or not that property has shares in the district or the owner has shares in that district. Secondly, riparian rights. If the property is adjacent to a stream or river that is continuous year round, it likely has some sort of riparian rights. That typically takes a water law attorney to confirm if any rights have been adjudicated in the past. It gets a little more tricky. Most properties in those areas, you can find out if it's been adjudicated fairly easily, but some of them you do need to get a court confirmation. As far as well water availability, I typically use well logs from the State Department of Water Resources and find out where static water levels are. consult with neighboring farmers and water users as to what kind of production they're getting out of their wells, how deep is the water, what's their drawdown, what's their recovery rate, etc. That's a physical availability side of it. And then you also have the government regulation side of it, which is Sigma. And it's very easy to obtain that information and what a Sigma score and what the plan, the groundwater sustainability plan for a property and for a basin that a property is in is moving forward. So it's sort of a three-tiered approach. It's going to take several hours per property to figure out kind of where exactly you stand. If things are easy to find out, it might take you weeks if you have some complicated riparian rights to figure out. So, but that's sort of the steps to figure that out.
Awesome. Thank you. That's very insightful. More questions we have. What is the best way to locate a broker familiar with the California agriculture business?
Right here.
That was easy.
That's all I do is as ag brokerage in California. I've been involved in farming in my whole life. Been brokerage for several years now, and that's all I do. So.
I think it's also important to note that we do brokerage from California to Florida. Quinn has sold property actually recently in Colorado. And so it's not as regional as it used to be because of our tools, relationships from coast to coast, and our affiliations with other brokerage houses and so forth. We can always be your first source and help you find both the right person in the area, and then make sure that at least you have somebody that is familiar with the industry to at least make sure that you're getting the correct information and that everything's reliable. So you can always start with Quinn.
And you can find Quinn at Northgate Commercial Real Estate. It's a separate company from Calturas. So you can search Northgate Commercial Real Estate for agricultural brokerage services.
I'll answer that question via text so he has my information.
Thank you. Thank you. Another question. Where are you looking for investments into farmland?
So we are, because we sit in the Central Valley of California, we are focused on California. We believe that the growth in this area and the quality of the soils are very unique and will continue to be in an area that will grow. And we also have, because of the relationship through the brokerage company, we look at many deals. We've got a lot of inside information on what's going on. We know farmers directly, and because of having that pulse, we do offer a competitive advantage to our limited partners who join us.
All right, thank you. What is the exit strategy for an investment?
So generally, for example, the one that we have now, we've got a 5-year investment plan where we're remediating a farm and bringing it up to cash flow, and we'll have a capital event in year 5, which would allow either a cash out or we would continue on. So those that want to cash out, we would convert it, or we would sell the property and bring the cash out to investors in year 5 after we bring it up to full production.
All right, thank you, Boyd. The last of my questions is, how are your current supply chain issues affecting agriculture?
So that's a great question. In that's a big issue, especially in California, as our ports here are all jammed up. But what we've done is, on the production side, we've pre-bought materials and chemicals and sprays and things that we want to make sure that we're not out of during the critical parts of the year when they need to be applied. In terms of pricing on commodities, I haven't seen a huge effect on the pricing side yet. I think that longer term, there's probably going to be some stockpiling so that people can make sure they have a supply for the markets that they've developed over the last, decade. Because without that supply, they can't continue to keep that market share. So on the supply side, they have been able to move nuts, and permanent crop supply. But I don't know if you have anything you would want to add to that, Quinn, that you've heard on your side.
Yeah, there's some talk that the port situation has actually held down the price of almonds just because we can't get them to the end user fast enough. Hasn't been as big of, and pistachios as well. Hasn't been as much talk in wine grapes or olives or other crops that aren't exported in such high percentages of their production here. Supply side, as far as farm supplies, it has made it difficult to get fertilizer and certain pesticides that are necessary. A lot of the good suppliers, good PCAs saw this coming and we're getting warnings from the distributors saying, hey, order it now while you can. And a lot of farmers, a lot of good farmers order a lot of their materials in the beginning of the year, at the bulk of it at least, to make sure it's ready when they need it, because it's not always predictable if you're going to need it tomorrow or 2 weeks down the road. So just good planning is the best way to hedge against that situation. And so far, especially on these farms, we've been fine.
Awesome. Thank you. Thank you, Boyd. Thank you, Quinn. Here's a question, a two-part question. What is the typical annual return or yield for an investment? And more specific one for based on a $50,000 investment.
So let's just use the olive orchard that we're remediating. When we get up to full production in year 4, it's roughly an 8 to 9% cash on cash return. So that would be pretty much consistent until a capital event. And so what we're forecasting with the appreciation on the property on this particular investment was 16%. And that primarily is driven by the appreciation from the remediation and getting that property up to its prospect value. And so, the cash flow is not going to be coming in until that 4th year. The 3rd year, there'll be a small return of cash. But then if you hold it after year 4, it's roughly 8-9% cash on cash return. And then, of course, your property's appreciating during that time.
And this investment, since it is a private equity investment, it does have an 8% preferred return from the time that the capital is committed. So you are earning a return on your capital while the farm's being remediated.
Thank you, Xavier. Thank you, Boyd. Mark asks, 12.1% return is for the past 40 years, I believe you started off the presentation with. What about the 5 to 10 years?
That was I can't give you that information off the top of my head. I'd have to research it, but that's why we present it in that way is that it's gone through many cycles. So if you smooth that out over time, that's generally the return that you could expect long term.
Okay, thank you. Do we have any more questions from the audience or any statements from Xavier, Boyd, Quinn before we wrap up here?
No statements on my side, Boyd.
Yeah.
Okay, perfect. If you want to leave off with your contact information, I'm not sure if you could bring that slide back up. We can end on that. So if anybody has any follow-up questions that might not be coming to them right now, but they will have in the future, you can contact Xavier or Boyd, and I'm sure they'll be more than happy to help you. And then if you have any questions for CamoPlan, my contact information was in the beginning of the presentation. And you can reach me at wmucker@camoplan.com or info@camoplan.com.
And you can find us at Calturas Capital or Calturas.com, online, Calturas.com.
All right. Thank you. Thank you all for your vast information and insight on the investing in the agricultural industry. And I hope everybody who attended had a great time and have a great rest of your day.
Thank you. Appreciate it.
Thank you. Bye-bye.
Thank you.